Good morning and welcome to the VinaCapital Vietnam Opportunity Fund 2022 interim results for the period ending 31 December 2021. My name is Khan Vu, I'm the Portfolio Manager for VOF, and today I'm joined by Andy Ho, Chief Investment Officer at VinaCapital and VOF's Lead Portfolio Manager, as well as Ismail Pili, Head of Research at VinaCapital. As you can see, Eric Levinson, who normally helps us moderate these conference calls with his mesmerizing blue eyes, is not here today because he's currently on assignment, and which I don't envy because the crowds at the airport nowadays are quite busy. Today, Vietnam is very much open, with domestic flights operating at pre-COVID levels for some legs, and as of mid-March, the country's fully opened itself to international travelers. Over the first 2 months of the calendar year, we've seen almost 10 million individual flights taken, or said differently, 5 million return tickets being sold. Vietnam today is very much living with COVID and very much open for business. Today we'll briefly cover the results for the first 6 months, followed by a short discussion with Andy and Ismail on the impact of the current geopolitical events have on market volatility, how it's shaping our outlook for 2022, and we'll also have a discussion as to the impact on our portfolio and how we're responding to it. The second half of the conference will open up to questions and answers. So I encourage our audience to start typing in those questions in the Zoom chat box, and we'll address those at the end of this section. The recording itself will be available on our website along with our interim results. Andy, it's been said that 2021 has been a challenging year. However, Vietnam was still able to deliver a very strong performance. The stock market was up 37%, and Vietnam was the best performing market for a second year in a row for the region. GDP is running at a very respectable 2.6%, and Vietnam again is one of the few countries in the region that's been able to deliver positive GDP growth during the pandemic. Can you talk to us perhaps as to why you think Vietnam has been able to be so resilient and overcome many of these challenges?
Thank you, Khan. You're right. Vietnam has done very well for 2021, and obviously we hope it will continue to do well in 2022 and the years to come. I think one of the few key components as to why Vietnam was resilient, if you will, during 2021 is, one, we've had a very strong year as it relates to foreign direct investments. A lot of multinationals continue to invest in Vietnam. Vietnam enjoyed a trade surplus, particularly with the United States. Our chief economists have mentioned many times before that the work-at-home equipments and products that people tend to buy because they have to work at home tends to be produced in Vietnam, and we benefit significantly from those items being exported to the United States as well as Europe around the world. The third area is that there's been, like other countries around the world, there's been a lot of excitement from the domestic investors. They've increased their interest in the stock market at a significant level. We saw a 2.5 million account we saw 2021 where there's 2.5 million accounts at the beginning of the year, increased to 4 million accounts towards the end of the year, and we saw liquidity in the stock market increase 5 to 6 folds during the 2021. So clearly, even though foreign investors divested about $3 billion worth of capital from Vietnam, it still represents a small component of foreign investment. But even though they divested, the domestic investors stepped up and provided more capital into the market. And as a result, we saw a vibrant stock market. And obviously, the economy grew at 2.6%, supported this level of capital investments and enthusiasm that we saw in the stock market.
Great, thank you. It's certainly been a very interesting year ahead. We'll come back to the market in a moment. But Andy, we normally cover this question at the end. What are your top 3 risks? But I think in context of the discussion today, perhaps we'll bring that question forward. Perhaps can you share with the audience what you're thinking about? What are your top 3 risks at the moment?
Yeah, at the moment, on the immediate front, I think on everyone's mind is inflation. Clearly, we're all looking at how oil and gas, fuel, energy is leading towards the inflation in the economy. We have to sort of think through how inflation impacts the investee companies, the portfolio companies, in the companies in Vietnam in general, and how are these companies able to move or pass through some of this inflationary costs to the customers, and how much the customer is willing to pay for it. So that's risk number one we need to think about, and we continuously evaluate that and its impact on our portfolio. The second risk, and maybe Ismail can address it a bit more, is China. Obviously China is slowing down a bit, and then some of the geopolitical challenges that China and Europe is having, how that impacts Vietnam. That's a second risk. And I think more a long-term, or I wouldn't say long-term, but a risk that is more continuous, that's in my mind, is talent management. We do have a lot of challenges keeping talented executives at some of our investee companies. There's a lack of talent that's meeting the demand of businesses that are growing in Vietnam, particularly domestic businesses. At the moment, a lot of talents are coming out from multinationals, and obviously Vietnamese leaders who are working in large Vietnamese businesses, but they're not a whole lot. And as a result, the supply is not meeting the demand that we're seeing in the market. And as you can imagine, the cost of hiring these folks will go up in the years to come, and this is the challenge that we need to face. How do we train them? How do we recruit them? And how do we keep them in the companies that we support?
So Ismail, let me bring in the conversation here. Andy talked about his second risk, the China growth story, and perhaps that slowdown. How do you think that will impact Vietnam?
Sure. The biggest relationship with China and Vietnam is actually the trade ties. At the moment, 36% of our imports are coming from China, and about 13% of our exports goes to that country. There's also FDI, which has been growing over the past several years. In fact, it roughly accounts for about 10% of FDI coming from China as we speak. And of course, with regards to that import and export story that I just said, we do have a big trade deficit, with China standing at about 15% of GDP. Mind you, the biggest risk right now to China seems to be about the COVID lockdown. The potential that zero COVID policy might actually affect supply chains, as well as Russia-related sanctions on China. Again, that's a political issue with regards to either China's involvement with the sanctions that the rest of the world seems to have imposed on that country, and whether China would probably try and have or maintain that relationship they've had historically with Russia. The positive thing, though, about this is that people are now evaluating or exploring the option of maybe moving to Vietnam more so. This trend has already happened well before this situation, well before COVID, but perhaps this might magnify that intent. So I think there's a lot more positives than negatives. And as I alluded to earlier, the biggest issue is with trade ties, with supply chains. But talking to some manufacturing companies, they seem to have sufficient inventory that would probably address that potential risk.
Yeah, I think I would add to that. One of the key groups of folks that come to Vietnam pre-COVID has been Chinese tourists. And if they continue to apply the zero COVID strategy, I can't imagine a whole lot of tourists coming to Vietnam, at least in the foreseeable future in 2022. Tourism does play a large component of our GDP, roughly 8% directly and 10-20% indirectly. And so I think that's a concern that we need to think about as we open up the economy. Where will the tourists come from? And obviously, with the euro being a bit weak against the U.S. dollars, I can also imagine a lot of tourists from the United States and other places around the world would rather go to Europe than a place like Vietnam. So that's a challenge that we have to face as we reopen in the next 6 to 12 months.
Certainly. So if we think that if we can't rely entirely on the tourism sector, there's this story about domestic consumption, right? You see FDI companies come to Vietnam, they're creating jobs, wealth is increasing, wages are increasing, living conditions are improving. Where do you see this domestic consumption story play into businesses this coming year? Do you see that consumption potentially suffering any of these potential headwinds that Andy talked about earlier on as risks?
Yeah, certainly this is a secular trend that we're talking about. Private consumption accounts for roughly 2/3 of GDP, so it is the linchpin to the economic growth. The 2.6% that they had last year was, of course, dampened down with the fact that consumption, I think, contracted by roughly 5% or 6% last year. And we're more optimistic that there will be recovery because we are embarking on that reopening phase of this cycle for this market. Already, as you alluded to earlier, the aviation sector with the passengers filling the airports is going to be part and parcel part of that story. But at the same time, we do expect that the impacted borrowers, because of lockdowns, will gradually recover. We are looking at 6.5% GDP growth. Consensus might be even higher. So you would think that that should actually trickle down to the consumer eventually. And of course, that should hopefully buoy up the whole business activity that we're seeing at the moment.
Fantastic. Perhaps if we can turn our conversation to the portfolio now. 2/3 of the VOF portfolio are allocated into three main sectors. Real estate at approximately 26%, financial services at 22%, and construction materials also at 22%. Perhaps I'll put this question to the both of you. In this rising inflation environment that we see, how will these sectors potentially be impacted or perhaps even benefit from rising rates?
Yeah. Maybe I can address the real estate side. Perhaps Isma can address the financial sector. What we're seeing is Vietnamese domestic investors, obviously, I mentioned earlier, they're very attracted to the stock market. They're also very attracted to the real estate market. And as you can imagine, as people feel a potential risk of inflation coming about, they tend to look at properties, landed properties, and real estate as a key play to protect their wealth. And so what we're seeing right now is a tremendous amount of growth in terms of real estate development, in terms of pricing in finished goods. Yesterday, I went to visit a large site within our portfolio company from Novaland, and they're building a resort site, 30,000 units, of which 10,000 units have already been sold, and they promised to complete this whole entire site, which is about 1,000 hectares, by the end of 2024. So we're quite excited about this. It's about a $5 billion development. But the exciting part is that people are actually buying these homes. They're going between $200,000 to $300,000 per home, and they're not that big. They're second homes, and the drive is about 2 to 3 hours away from Ho Chi Minh City.
That's really interesting. I mean, particularly this idea that the economy is maturing, and domestic buyers are now considering second homes. That's really interesting. Perhaps, Andy, before we go back to materials, while we're on the topic of construction, you're looking at the material sector. In terms of profitability, Hoa Phat Group is almost a $10 billion company in terms of market cap. It's the leading steel producer here in Vietnam. It remains one of our largest holdings. 2021, Hoa Phat delivered spectacular results. I believe their profit increased to almost 160%. And yet the share price for Hoa Phat didn't quite seem to reflect this. And the second half of the year, the material sector is one of the weaker performing sectors. Perhaps, Andy, if you can help our audience understand why this dislocation, why has it occurred, reconcile the performance of Hoa Phat, and perhaps what our medium to long-term view is for this company.
Thanks, Kan. Just a little bit of background on VOF's relationship and history with Hoa Phat, or HPG. We invested in this business around 2008, about $400 or $500 million in value. And I sat on the board for many years subsequent to our investment. And during those years, we made a lot of, we worked with the management team as well as the board to make a lot of investments. And one of the key investments that they've made is to develop a fully integrated steel complex. My time on the board, we developed phase 1, and subsequent to that, we approved phase 2. So what happened in late 2020, phase 2 came into, the capacity of phase 2 came in, and that allowed Hoa Phat to produce steel at a significant discount to their competitors. Most every single steel company in Vietnam at the moment continue to import scrap metal and melting it down to produce steel, whereas Hoa Phat produces steel from a fully integrated steel complex, from the raw material, from iron, coke, etc. And as a result, they're able to produce the finished good at a significant discount to their competitors. Mm-hmm. And so what you can see is a situation where they've gone from number 11th largest steel company back in 2008 to the number 1 steel company today, and everything they can produce, they're selling. So what happens in 2021 is they're able to sell everything they produce, maximizing the revenue as well as their profit. They came in $1.5 billion of profit after tax. But the issue that we're going to face going forward is over the next 2 to 3 years, in fact, will be somewhat of a flattening of the revenue because they're basically fully utilized. The capacity is fully utilized, and any revenue growth would be in the form of average sales price increase. And so the phase 3 will probably not go into production until late 2024, early 2025. And that's probably what's happened. The market is reacting to the fact that growth will be flat for the next couple of years. We are working with the company to ensure investors that this is still a quality company, and they'll continue to deliver, 1.4, 1.5 billion dollars of profit after tax in the next couple of years. And more excitingly, in 2025, they'll grow from there with the introduction of phase 3 capacity.
Thanks, Andy, and thanks for helping reconcile and explain that. Ismail, let's turn back to the financial sector, and there's this lot of discussion about interest rates. You were seeing the U.S. Fed already start their policy pivot. The rates have been they've started to raise rates already. What does that mean for Vietnam, and do you see perhaps similar rate increases here in Vietnam? Who will be the beneficiaries of this policy tightening? The commercial banks, the state-owned banks, and how do you see the market overall reacting to the rising rate environment, given particularly the financial sector is one of the largest sectors in the index?
Sure. Let's bring it back to your initial question about inflation. The whole world seems to be preoccupied with this issue, but I'm going to say that in Vietnam, it's not as much of an issue. Our inflation at the end of last year was 1.8%. As of February, it was 1.4%. So we're going the other way. In essence, if you look at the Fed, their answer to high inflation is part and parcel the increase in interest rates. Now, Vietnam does not have that issue. At the same time, they're trying to buoy the whole market up, the economy, I should say, simply because we had a relatively weaker than normal, around 2.6% GDP growth, and they want to try and lend support to the businesses. Higher interest rates just doesn't seem to be in the offing, at least to the same magnitude that we're seeing elsewhere around the world. So the first thing I'm going to say is I would probably downplay the notion of rates going higher or as high as we see elsewhere in the rest of the globe. If it was to rise, however, banks tend to do well. And part of the reason behind that is margins have a historical association with rates. And if it goes up, then margins go higher. Every bank around the world gets driven by two things, margins and provisions. And so if it does go higher, it's actually positive for the banks. Now, on that second point about the provisions, again, the interest rates may not go as high as people expect it to be, which is great for asset quality. And in fact, a lot of the banks have kitchen sank in the fourth quarter, which means it paves the way for this year and even next year for provisions to be quite low. We're very optimistic on the banking sector. We're looking at 31 to 32% net profit growth. I think it's going to be one of the leading sectors for this year. It's probably one of our preferred sectors as far as the stock market is concerned. And if you look at the weight, as you said, it's about a third, roughly, of the VNI. And you would have to imagine that if the VNI goes to whichever direction, the banks have to ride alongside with it.
Excellent, great.
Yeah, so adding to Ismail's point, this is exactly why we chose to take a larger position in ACB. A few weeks ago, we negotiated a large block, 1.8% of ACB to acquire. And it speaks to the fact that, like Ismail was saying, one, we expect the margins to expand. But more importantly, the quality of asset, the quality of the loan book is quite high at ACB. It's probably the best private bank out there. And we also continue to be very bullish on OCB. It's a smaller bank, but the quality of asset is also very, very high. And we expect these banks to grow anywhere between 25 to 35% in earnings in 2022.
Great, thanks, Andy. Yeah, perhaps while we're on the topic, Andy, of new investments or additional investments, perhaps share with our audience how are you thinking about the terms, the deal structures, what you're being able to negotiate, particularly in light of the risks that we're talking about. How is that impacting the way that you're able to negotiate new opportunities?
Sure, I think we've been very fortunate. We have a pipeline of about $300 million worth of opportunities at the moment. But as you can imagine, with market volatilities, with political volatility, with geopolitical uncertainties and economic uncertainty, we're leaning towards having more downside protections than less in terms of our investments. So what you'll see in the next 6, 12, 18 months is investments that will be accompanied by significant downside protection, as well as what we probably call emergency exit, if you will, and that's what we call put options in the 2 to 3 year time frame if things don't go well. And obviously, these options that we have will come with some sort of collateral, some sort of assets to back up the ability of the sponsors to come good on their commitment. And so a combination of understanding the volatility of the market and what's happening in the world in Vietnam going forward the next 12, 24 months, combined with downside protection, combined with getting assets as collateral from the sponsors to ensure that the commitments can be realized. Those are the key components of our investments in the next 6 to 12 to 24 months.
Thanks, Sandy, and Ismail here. So as you can see this morning, we've covered quite a lot of ground. So what I'll do now is I'll turn it over to the Q&A session. If you give us a few minutes while we pull up the questions. So let's go to our first question. It's been a topic of much discussion recently, and it surrounds the Ukraine conflict. The question here is, what are the economic implications on Vietnam from the Russian conflict? And a follow-up question to that is, has Vietnam imposed any sanctions on Russia?
Okay, I'll take that question.
Sure.
So the direct impact to Vietnam is small, if any at all. And in fact, it's probably more about the indirect impact largely arising from Europe. If you want to put some numbers behind that, it's going to be less than 1% in terms of trade. So export is only about 0.6% of GDP, and import is only about 0.4% of GDP. Conversely, the FDI from Russia is 0.1%, so it's nothing. It's more about those indirect impacts to Europe, as I mentioned, and this will either come in terms of higher global prices or things from Europe, but that in itself is also quite minuscule. The export to Europe is probably the biggest part, which is only about 14% of our GDP, and in terms of imports, it's only 4%. But those commodities that we've seen across the world, from natural gas, oil, those things are not affecting us. Things such as wheat, again, not an issue. Sunflower oil, palladium, gold, coal, again, this is not going to affect Vietnam at all. As far as the sanctions is concerned, Vietnam is playing it cool in the sense that they're pretty neutral. So no sanctions, but at the same time, relatively neutral. They're playing it on both sides of the fence.
And perhaps if I could add, as it relates to the VOF portfolio, as we disclosed in the interim accounts, and we've made a very clear statement, the portfolio has no exposure to investments in Russia, nor is the portfolio have exposure to the economic consequences or economic links to Russia. So just to be clear on that. Yeah. Just another question, Andy. Just turning now to the private equity portfolio. We hear a lot that VOF is a great way to access the private equity opportunity set here in Vietnam. That's sort of one of the things that makes VOF quite unique. As private equity specialists here in the market, what do you see are the ongoing private equity opportunities for VOF, particularly post-pandemic?
Yeah, you're right. Now, we like to position that VOF has the ability to give shareholders a chance to access the private investments or the private equity opportunities in Vietnam. And one of the things we've seen over the years is that the opportunities have gotten larger and larger as businesses become obviously bigger, the economy gets bigger, and the maturity of the businesses, it's even grown significantly. So the deal size we're seeing these days are anywhere between $30 to $50 million. And what we're seeing post the pandemic is a chance for consolidation, which means that there's a lot of businesses that have not done so well because of cash flow constraints through the social restrictions and the lockdown periods that Vietnam faced a few months back. As a result of that, there's a chance to consolidate, particularly in the healthcare space or even in education spaces. So those are the one area we're considering at the moment. We also like the consumer space. We're looking at a few opportunities in the consumer space. And then obviously the logistics space with the ongoing China-US trade war, there has been a lot of multinationals migrating to Vietnam to diversify their manufacturing base. As a result of that, we're seeing a lot of demand for industrial processing zone, industrial processing park, or areas that they can set up a factory and build or manufacture goods for exports. So we have land as an opportunity, we have service provision as an opportunity, we also have infrastructure, logistics related to that as opportunities. So those are the key areas we see in the next 6, 12, and 18 months.
Thanks, Andy. And I think the important thing to say there as well is that, those sectors and those opportunity sets we've been looking at pre-COVID, and those opportunity sets remain very interesting as we come out of this post-pandemic world.
Yeah, you're right. I mean, we have looked at these opportunities pre-COVID, but as I mentioned a few months back, we took in a very slow approach to some of these businesses because we weren't sure how these opportunities that we have not invested in, how these businesses and their management team are able to navigate themselves through the social restriction period, particularly as it relates to managing cash flow.
Great. Well, the next question, perhaps I'll take a stab at this one. And it's a question surrounds the recent VOF dividend announcement. Can we talk about the fund's policy and views towards dividends going forward? And there's a related question here about, is there opportunities to grow the dividends in the future, in particular, given the portfolio's growth orientation? So yesterday, you may have, our audience may have seen the fund announced its regular semi-annual dividend of 1% of NAV. That dividend is consistent with the dividend that was announced last year of 8 cents per share, 8 US cents per share. Importantly, that's remained very consistent throughout this period of volatility. And in fact, last year when we announced the previous dividend, it represented about a 30+% increase from previous dividends. The quality of the portfolio, the income that the companies within the portfolio is able to generate has been able to sustain a stable dividend to investors. Importantly, VOF is the only Vietnam fund that pays out a regular dividend. And that, coupled with the share buyback that we've had in place since 2011, has meant that our investors enjoy a return on their investment beyond sort of the share price appreciation. So the board has a policy of sustaining that dividend, and as you've seen last year, they are minded if there is an increase in the NAV, then there will be at some point the corresponding increase in the dividend to match that. Yeah. So. I guess just to wrap up, we've seen obviously quite a lot of volatility in the markets. One of the questions here, Ismail, perhaps just to wrap up today's session, is that the retail participants that are in the market, quite significant. The foreign investors, how are they investing in this market? Do you see a point where perhaps they return to the market? There's certainly foreign money coming into Vietnam through the form of FDI, direct investments. What about the public markets?
Sure. So the foreign investors account for about 6 to 7% of value turnover. We've seen the domestic base rise over the past year and a half to the point that they dominate to the extent that regardless of what's happening outside, they seem to be able to buffer all the exogenous noise that seems to be hitting Vietnam. Our expectation is the foreign investors will have to get back here in this market simply because it's so attractive. The valuations are cheap, the growth outlook is actually quite strong, and the economic backdrop is very stable, not just in terms of the macro, but as well as the political picture. I don't know how many investors can actually resist that. And our expectation is that eventually they will funnel down here. Prior to this year, there was already a move towards a rotation away from the US, where they enjoyed the benefits of the early recovery play, but the valuations have, of course, pushed that up, and there's been that Fed pivot. We come here, we look at the GDP growth outlook in this region, we look at the reopening play, and it just makes sense that they actually start looking at Asia and perhaps more so in Vietnam. So we're quite optimistic that we will still see another positive gain for the Vietnam market this year, notwithstanding the volatility that we see at the moment.
Great. Thank you. Thanks very much, Ismail, for that. Andy, sort of any closing thoughts here before we wrap this interim update?
Yeah, I think for the first half of the fiscal year or the financial year 2022, I think we've done quite solidly. Into 2022, I think we're going to face some challenges. I don't think we're going to see strong performance as we've probably seen in the calendar year 2021. But we hope it sets a foundation for 23, 24 to come in terms of making good private equity investments. And some of these investments we hope will go public and will manage as a public equity investment. But also some of these investments we'll see go through trade sales. And what we're seeing now is because everyone's moving towards living with COVID strategy, and as Vietnam goes through that period, that phase as well, we are also seeing multinationals come to Vietnam and making acquisitions on an aggressive scale at the moment. So we hope that some of the companies in our portfolio company today will also be able to go through a trade sales in the coming months and year. So the hope is it is now time to look at how we operate as an economy and how we invest in this post-COVID world to take advantage of some of the enthusiasm we're seeing in the domestic market, as well as international enthusiasm for Vietnam, since we are expected to grow at about 6 to 7% per annum in terms of GDP. So we hope yourself as shareholders will remain shareholders and have confidence in our ability to continue to deploy money in Vietnam, invest in some of these great businesses in Vietnam. Thank you.
Thank you, Andy. And certainly part of that enthusiasm is us being able to have the opportunity to meet with investors, not just via video conference, but in person. And to that extent, Ismail and I will be in London in late April at a conference, and we'll also be traveling throughout the United Kingdom to meet with investors. We'd love to have the opportunity to meet up with face-to-face and follow up with any particular questions that we may not have been able to cover today. We want to thank our viewers for participating with us today. Andy, Ismail, thank you. And in the meantime, keep safe, stay healthy, and fully invested.